Here's a leadership shakeup that's got the fintech world talking, and it might signal bigger changes ahead for India's digital payments landscape. After half a decade of steering one of India's most recognizable fintech subsidiaries, Varun Sridhar has officially concluded his journey as the chief executive of Paytm Services. This subsidiary operates under the umbrella of 197 Communications, and Sridhar's exit marks the end of what many industry insiders consider a transformative era for the company's financial services division. But here's where it gets interesting. Sridhar didn't just oversee routine operations during his tenure. He was brought aboard during one of the most critical periods in Paytm's corporate history, the lead-up to their much-anticipated initial public offering. For those unfamiliar with IPOs, think of it as a company's grand debut on the stock market, where private companies become publicly traded entities that anyone can invest in. Sridhar's fingerprints were all over the operational framework that enabled Paytm's public market debut. At Paytm Money, the investment arm of the business, he championed several groundbreaking initiatives that reshaped how everyday Indians interact with financial products. He spearheaded the introduction of daily, systematic investment plans for mutual funds, essentially allowing people to invest small amounts every single day rather than monthly lump sums. He also expanded their digital gold offerings, making it possible for users to buy gold digitally in tiny quantities, and pioneered secured lending solutions. And this is the part most people miss. Under Sridhar's guidance, the division didn't just grow. It actually started making money. In an era where many fintech companies burn through cash while chasing growth, achieving profitability is no small feat. Sridhar's professional journey spans over 2 decades, with nearly 8 years at French banking giant BNP Paribas before joining Paytm. During his BNP Paribas stint, he orchestrated the acquisition and seamless integration of Sharekhan, a prominent Indian stockbroking firm. This experience across traditional banking, wealth management, and cutting-edge fintech positioned him perfectly for his Paytm role. Currently based in Goa, India's coastal paradise that's increasingly becoming a hub for tech professionals seeking work-life balance, Sridhar recently shared on LinkedIn that he's taking a deliberate pause before his next career move. His considerations are intriguing: launching his own Wealthtech startup, diving into AI-powered education solutions, or simply taking a well-deserved sabbatical before re-entering the startup ecosystem. Sandeep Bharadwaj has now taken the helm of Paytm Money, inheriting a business that reported revenues of INR 195.7 crore and profits of INR 71.6 crore in the fiscal year 2024. While these numbers paint a picture of financial health, there's a challenging reality that can't be ignored. But here's where it gets controversial. Despite Paytm's brand recognition and financial performance, the platform continues to lag behind competitors like Groww, Zerodha, and Dhan when it comes to attracting new users. This raises a provocative question. In the hyper-competitive Indian fintech space, is profitability more valuable than rapid user acquisition, or are companies like Paytm playing it too safe while rivals capture market share? Sridhar's departure comes at a fascinating inflection point for Indian fintech. As the industry matures, we're seeing a shift from growth at all costs mentalities toward sustainable, profitable business models. Some argue this conservative approach will pay dividends in the long run, while others contend that in tech you either grow fast or get left behind. What do you think? Should fintech companies prioritize profitability over explosive user growth? Or is Paytm's cautious approach potentially costing them the market leadership they once seemed destined for? Share your thoughts on whether Sridhar's strategic focus was the right call, or if you believe a more aggressive growth strategy would have served Paytm better.